Hello students and welcome to the lecture. So students, basically as we know that we are covering the financial system, and basically in financial system what we are doing, we are covering the non-banking finance companies, right? And in this particular series we having these topics which we have scheduled for the discussion, like starting with the introduction part, credit intermediation, asset financing, housing finance, microfinance, investment and the wealth management, infrastructure finance, and the conclusion, right? Out of this, we have covered introduction, credit intermediation, asset financing. What topics we are left with? Housing finance, microfinance, investment and the wealth management, infrastructure finance, and the conclusion. Okay, so I hope that you have revised the previous lectures in the well enough manner before you have come for this lecture, as I have told you many times that it is for your own benefit. Okay, so basically we have completed the asset financing in the previous lecture. All right, so now what we are going to start with the housing finance. But before this, let me give you one thing, that kindly revise the balloon payments and the hire purchase, and the last one was lease versus rent. Okay, because these topics are typical to understand, they might seem very similar but the terms could be different. Okay, so that's why it is my humble request and the solution to you, kindly revise them. Okay, now let's start. So basically now we are going to start the housing finance, but here is the one thing which I am seeing here. It's a word, we call it as a housing. Now this is my question to you. What do you mean by housing? Like, what is the meaning of housing? Okay, so housing basically means to build houses or to renovate existed houses. Okay, as we know that human is a social animal. All right, so we require a housing to live. All right, and there is a one thing which I would like to tell you. Who told this, that human is a social animal? So the correct answer is Aristotle. Okay, he was the one who told that human is social animal. Okay, so it doesn't have anything to do with our exam, but here I have just told you for the knowledge part. All right, now come back to the thing which we were discussing, housing. We have taken the example that housing is to build houses or to renovate existed houses. Okay, and now we are talking about this in the lecture of NBFC. Okay, but my question is that in India there is an apex institution, okay, which is, you can say, responsible to look after the housing sector of the country. You are required to tell me the name, establishment year, and body status. Also you can call it type of the body. Okay, to answer this you having the 25 seconds to think and answer, and your time starts now. Just think about it. Name, establishment year, body status, or type of the body. Okay, let me give you a hint that we have discussed it in the previous lecture, so you could easily recall it. Okay, only 5 seconds left. Time's up. So basically we talk about it. So the name was National Housing Bank. Okay. In short, famously known as NHB, right? Second, if we talk about establishment year, so it was established in the year of 1988. Establishment year. All right. Thereafter, if we talk about the body status or type of body. So which type of body it is? It is statutory body. Why? Because remember, however, the NHB was established in the 1988, but National Housing Bank Act 1987. Okay, famously known as NHB Act 1987. The act was passed in the 1987. The body was established in the 1988. And what we have studied, if some body having its own act, then this body will be which kind of body? Statutory body. Okay, so this is a statutory body. All right. So by seeing houses, I recall it. So that's why I have put the scenario in front of you so that you could recall what we had studied in the previous lectures also. Okay. So basically, now take the overview. Housing finance overview. NBFCs that specialize in housing finance play a pivotal role in the real estate sector, contributing significantly to the objective of making housing more affordable and accessible to the broader segment of the population. Okay, remember, all the residential areas are the part of real estate sector. Okay, you have listened this name many times, you have seen this name many times in the newspaper, in the advertisement boards, in the social media platforms, whatever. They are basically responsible for housing sector areas. Okay, so in the housing finance, first we have loans to individuals for home purchases. NBFCs provide housing loans to the individuals for the purchase, construction and renovation of the homes. Okay, remember, basically housing deals with three segments. Okay, purchase, okay, construction, and third one is renovation. Okay, so it is basically depends upon the choice of individual, like whether he want to buy the ready-made house in some society or apartment or whatever you can say. Okay, he want to make his own house in front of him. Okay, so that he could be satisfied with the building quality. Third, want to make some changes or upgradation in already existed housing. Want to make some changes or upgradation in already existing houses. Okay, so basically when we talk about the NBFC, okay, so NBFC is open to all the types. Okay, whether it's a purchase matter, construction matter, or the renovate matter, the NBFC will provide loans in all these scenarios. Okay, loans in all these scenarios. Got it? So keep this thing in your mind. They often serve customers who might find it challenging to obtain a mortgage from the traditional banks, including those with informal income, those who are self-employed, or those with less than perfect credit history. Okay, for example, I think that it will be a far better to explain you in the real-time scenarios than just explaining you formal way. Okay, so suppose this is a person. Okay, this person goes to the traditional bank. For which? For which kind of thing? For the loan. Okay, so traditional bank will ask him to show salary slip, okay, credit history, all right, bank statement, okay, other documents. Okay, so this kind of things will be asked by him, will be asked to him by the traditional banks. Okay, like salary slip. So basically, if the person is from the informal sector, it means that whether he is a labor and all right, and if he is self-employed, it means that he having its shop, its small business, this kind of things. So they are not eligible, or you can say not capable, to show the salary slip and all. First case, okay. Second, if they having the no or little credit history, okay. If they do not having regular inflow, or you can say fixed inflow in account, okay, and other documents, they are normal. Okay, so if this is the case, it means that if the person belong to the informal sector or the self-employed sector, they do not having the salary slip with themselves because they are not getting any salary from anywhere. Second, credit history. If the person have not taken the loan from any financial institution, from banks in the previous ones or the past terms, so he will have no or little credit history. This is also the difficult case. Third is bank statement. Those who are working in the informal sector and the self-employed persons, they do not having any regular inflow or the fixed inflow in the account. For example, suppose you can say there are 3 months, January, February, March, April, 4 months. Okay, if you having the salary of rupees 50,000, for example, okay, in the month of Jan, 50,000 will be in your account. Feb, 50,000. March, 50,000. April, 50,000. What is the significance of this? What do you mean by this? It is a fixed inflow or income. Got it? So basically, bank see this kind of things in a very secure manner because they know that you are getting 50,000 as a fixed amount in your account so that you could bear the EMIs on time. So that's why there is less chances of default from your side. Okay, whereas if we take another example in which there are 4 months, January, February, March, April. Okay. So there are two cases. First is the informal sector. Second is the person belongs to the self-employed group. Okay, as per these two cases, in January he is an inflow of 25,000. In Feb he is not get any work, so 0. In March 30,000. In April 15,000. Okay. Thereafter, if we talk about this one, self-employed 25,000, 40,000, 10,000, 2,000. Okay. So if we look at this picture, what we are seeing, they are having irregular flow of income, right? This is the scene. So what will happen then? The bank will see this as an unsecured manner. Because in such a cases, the bank will find that this is a irregular flow of income, which means that there are high chances, or let me write down again, that there are high chances of being defaulted. Got it? There are high chances of being defaulted. So get this thing in your mind. Okay. So here we have seen that these are the problems with the individuals who belong to the informal income sectors and the self-employed sectors. Okay. And those which having less than perfect credit history. Okay. These people are oftenly not preferred by the banks to grant the loans. But for this, NBFC prefers loan facilities for them. Okay. So that they could be benefited. All right. Customized loan products. Housing finance. NBFCs offer a range of customized loan products suited to the different customers' needs, such as loan with longer tenures, flexible repayment options, and varied interest rate structures like fixed, floating, or the hybrid interest rates. Okay, so here we have seen that there are three types of interest rate: fixed, okay, and the hybrid rates. So what is the meaning of this type of rates? Okay, like what do you mean by the fixed, floating, hybrid? Okay, what do you mean by this? Okay, so let's understand them one by one. First is fixed, means fixed throughout the tenure. Okay, floating, fluctuate during the tenure. Hybrid, fixed in initial days, then fluctuates. Okay, so this is the three type. Let's understand them one by one. Suppose you have opted for the fixed interest rate, which is 9% per month. Okay, and you have the duration from January to June. Okay, or July exactly, for 6 months. All right, so as by this, January to February, February to March, March to April, Okay, April to May, May to June, all right, and June to July. Okay, this is the, you can say, months. Okay, so basically in the Jan to Feb, it was 9.9%, 9%, 9%, 9%, 9%, 9%. So what you are seeing here, for the entire duration, the rate is fixed. This is called the fixed interest rate. Okay, whereas if we talk about the another one, which was the, which kind of interest rate? Floating. So floating is basically depends upon the market conditions. Okay, like for example, that during the first month, the rate was 10%. Feb to March, it was 6%. Again, it was 10%, 8%, 12%, 9%. What you are seeing? This is irregular, right? And this is generally happen due to the inflation and the deflation condition of the economy or the market. About it, we had already discussed in the previous lecture, so I'm not going to explain you why the inflation deflation matters. But the thing I would like to tell you is that during the inflation, what will happen? The interest will be goes high, all right? And the during the deflation, what will happen? Interest will be goes down. Okay, this is the situation. That's we call as a floating. All right, because right now it's having the irregularity. Okay, but now if we talk about the third one, which is known as the hybrid. Okay, hybrid. So let's understand it also. All right, let me write down again after erasing all of these things. Okay, so all right, now it's ready. Let's start. Okay, so basically, as we have seen, fixed up to certain duration, then depends upon market situation, right? Let's go by this. For example, it was 9% for January to Feb, February to March, March to April. Thereafter, it starts fluctuating, become 10%, 15%, 6%. Okay, so what you have seen? You have seen that during the 3 months, it was in fixed duration. Okay, thereafter, in another 3 months, it was in fluctuations. All right, so this is the condition of fixed, floating, and the hybrid. Remember, fixed throughout the tenure, fluctuate during the tenure, fixed in initial days, then fluctuates. Examples I have given you. All right, so remember, NBFC customize the loan products as per the customer needs. Okay, and they offer 3 type of loan interest: fixed, floating, or the hybrid rates. Okay, simpler procedure and documentations we have already seen. They often have the simpler and the faster loan approval process compared to the traditional banks, with minimum paperwork, which is crucial for many buyers, especially in fast-paced real estate markets. Because in the real estate market, they are totally dependent upon the current situations. Okay. So if they are not getting the loan on time, maybe their profit and the prospectus will be declined. Okay. So students, basically in this lecture, we have finished till there. In the next lecture, we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.